Greetings, market rebels and market watchers. It's that time again. It is macro measure time here on Friday, February 20th, 2026. And we're going to combine that, as we have been for some time, with our sector situation video. Excuse me. Here is a trusty market rebellion disclaimer. Here is our trusty market rebellion intellectual property rights notice. I'm Wayne, and we're getting into it now. Here's last week's slide. Trying to think if I highlighted anything on here. It's been crazy. Okay, so somehow, okay, great. So I looks like I might have added something on the wrong slide. Yeah, so I did actually because I just got to get this taken care of so we can get this out. This is supposed to be for this week. Spidey sense starting to tingle. So I think that's what they used to say in the cartoon all those years ago when I watched it as a kid. But haven't had this feeling in a while. But with all this stuff going on, I guess it makes sense in some ways that something's just up out there and I don't know what it is and for sure. And yeah, so I'm just going with that and I think you just gotta remain as we've been. I think we went into this mode of sort of being more or less keep your shields close by or keep your shields up DEFCON wise about a month or so ago. I can't remember. And it just had to stay that way. And it's probably a good thing. So I don't think I'm going to spend much time on this stuff here. I do think what we said about this being tricky stuff was worth the comment. It was worth the time. It's been a very tricky week, sort of in the SPY. It's sort of oscillated between the 100 and the 50 SMA. And now, for that reason, we'll just move on because that's a good place to pick it up. So, wanted to put that Spidey sense starting to tingle here, but this is this week's slide. I'll try to cover things real quick. I'm calling this squeeze play or pure BS. What was last week? I think last week was, yeah, turbulence, but so, yeah, and it was kind of more turbulence this week. And we thought we saw, some things potentially tilting negatively, despite some really good things happening in terms of market breadth. You can spin this great market breadth stuff and say, well, yeah, it still is great, and or it looks in different ways. And you can spin that and say, yeah, so how often does it get better? Right? So there's always that other way of looking at it, of course, the inverse way of looking at it. But we're going to talk about this stuff really quickly. Uh, Today is I'm calling squeeze play pure BS, and you don't really hear me talk about complete BS that often, but I'm going to jump to this point right here where um, you had the initial tariff really nothing burger. So you get the Supreme Court ruling that was the consensus ruling. That was really, I think, the expectation from what I could tell. They essentially, right, the tariffs are gone. You get this squeeze on this, right, where they started instantly ramping right up to critical, resistance, former support near the 689-ish level that we had in SPY many times. We talked about that many, many times over the last several months. And then Trump, shortly thereafter the squeeze, right, Trump just reassembles, goes T1000, and then tacks on an additional 10%, I believe, under some other law or some other tariff law that did not get shot down. What do? They squeeze anyway. So how can these two outcomes, which would seemingly be 180 from each other, how can that possibly end up with they both squeeze? And this is what I've been trying to convey. And this is not just about like patting myself on the back, but I don't know how many new people come into these. We have a lot of new folks that jump into this stuff at times, and I always try to point out things that if you listen and hear them a few times, you'll learn them like I did. You'll say, you know what, that does tend to happen more often than not. And the argument we're getting at here is that when you hear that these people come on and assign reasons for everything, that's just a BS way of presenting things, in my opinion. There may be times where there's definitely reasons that you can a sign or a tribute for the market doing a certain thing. But it seems like they've always got one. And there isn't always, I think there is not always a reason, right? And this is a great example of that where, well, wait a minute, you end up closing near the highs as it looks right now with what, uh, 15 or so minutes remaining in today's session. So no matter what happens on tariffs, they're off, they're on, you end up squeezing anyway. Total BS. I'm not, doesn't really matter to me. I mean, probably helps some of our ideas. Just saying this is what I'm getting at when you hear these people claiming they know all the answers. I've been seeing this nonsense for so long, it just be extremely hard to listen to. So I just want to point that out. There doesn't always have to be a reason. As I've said many times, you end up in a situation where uh, it's sort of like the plumbing, right? That people refer to it as the plumbing of the market. And there's a lot of shenanigans around VIX expirations. There's a lot of shenanigans around options expirations, a lot of very curious movement. And it's just like everything, you can't really easily discern whether it's legit or not. So this there could be bad news, and you come in on Monday, and you could call it BS. Oh, see, that rally was BS, and you might be able to make that argument. But you could also come in and there's good news, and then it just keeps going. And you have to say, did they know something, right? Are they playing on info that they have, not today's info that really would confuse people as to why you'd rally, but other info that's looming or lurking? I don't know. I'm just putting that out there because I've seen that many times where the reason why something behaved curiously was because some deep-pocketed players knew not just that day, but well in advance, and they were essentially accumulating in front of it, regardless of the outcome of certain news items and economic reports. So that's where we are. We're already in stream of consciousness. Calling it intergalactic because Trump is talking about revealing, I guess, some non-human intelligence information to the public. That came out of nowhere. Apparently, he's using Obama comments to, I guess, spill the beans, so to speak. Who knows, right? That's just more kind of atypical news that I've been hinting at in terms of what we could be seeing, and who knows what's next. And that's why I try to put the reminders in to always be on your toes with Trump, because this is not something you typically see, right? This kind of stuff in different ways, the Venezuela type stuff, all these different things that have happened. It's just a very atypical, in the purest sense of the word, disruptive type of a situation, and meaning like it's just not normal, par for the course type stuff. Which again, I mentioned many times that was taken completely out of context or stretched in a way that was not meant by a former member of Market Rebellion way back when. And I'm still trying to understand how that could be confusing. But I guess when people get they want to get real political and take everything the wrong way, I guess. So it is what it is. But I'm talking just pure, aside from politics, just disruptive, because there's so much news that gets made, and so you just don't know what's going to hit the tape next. Anyway, going to talk about, you've got the narrowest range since 66. We talked about that this week. That came out. Some folks were circulating that. You have a lot of energy stored in this market as a result, because you really have sideways, right, for most of this year. You really have done virtually nothing for most of the year. I think you're less than, I want to say, like, maybe from where you closed out the first week in January, you're almost at the same level as you are right now. And the first week was mildly higher, right? So that's where you are. So after all this time, right, almost, we're two-thirds of the way through February. So it is what it is. That means in my mind, there's a lot of energy there. But war is looming. I think there could be other news looming. And just for example, an example on that, right? Andrew, the news out of the UK. Well, then who's next, right? So is this the start of something larger related to the Epstein Island fallout? And who does that touch? Does it matter if it does? But these are the kind of things that could drop. This type of information could continue to drop, and you just don't know who it stings next, or if it does at all. It's just adding more to it. And you could say, well, What's the big deal? Some whatever Wall Street figure gets busted, but that's probably a good way to look at it because there usually just is a few sort of well publicized things done to quell the public, to sort of throw a little bit of water on the fire the public's calling for. Um, but maybe that happens, maybe it doesn't. It's just another part of the uncertainty situation, and you end up, I think, with more people. I think you end up with more people t take, and then there could be fallout from them, right? So we'll see, but that's just more to it. Trump is also claiming that the Supreme Court is influenced by foreign parties, and he's claiming he's going to reveal that. That's the latest. So this is what I keep getting at. So despite all this stuff, right, I think you're on the cusp of squeezing higher again. You've got the Qs and the spiders on the cusp after they've absorbed really a lot of selling again this week. There was a lot of wild under the surface behavior. So I think there will be some reckoning for this market. I just don't know if you'll see that right away. So I think I would not rule out the possibility, despite everything, that they put together a squeeze higher of just not just a few percent. I mean, we're talking a new leg that squeezes up and through, despite it all. Because just when you think you've seen it all, my experience has been that the gang manages to pull one last rabbit out of their hat and basically create a rally, not all the time, but create a rally that really takes people's breath away. And it's really absurd. And I'm not saying that this would be absurd, completely absurd. I'm just saying it could be absurd. And so I wouldn't rule that out as my warning, even if you are bearish and starting to see all these problems develop in the economy and so on and so forth, which a lot of people are. So we'll see. A lot of this is redux. I'm just going to leave it there. I did highlight some other things. This is new. Right. So AAII showed a major bear spike over bulls. We haven't seen that since I think late November. CNN, their gauge is in fear, but the Bank of America, which is probably a better gauge, that's in greed. So those things are in conflict. So you've got a ton of bears relative to where we've been recently. You've in AAII, you've got short-term fear in CNN, big picture sort of longer term oriented fear in Bank of America. And then you have these shorts that are positioned in really heavily into tech, XLK, but SMH is not going down and NVIDIA EPS is looming. And I do think we mentioned that you might not, if you do get a market drop, you might not get one until NVIDIA is out of the way. And that's holding up to this point with NVIDIA, I think, looming this week. So I think these big bets are still dried up. Um, and I'm leaving the rest of this kind of as is, other than down here, to me, it's getting right to the chase right now as you're looking at a massive squeeze potentially looming after all the inventory some players have absorbed. There's been a lot of selling under the surface in certain names, and yet they've deftly handled things. So you could see that. At the same time, you could see um, major major news driven rug pulls. So so that it's I hate that it's sort of wishy-washy because I know everybody wants something definitive, but I continue to maintain and will always probably maintain that if you really can't pound the table, you shouldn't, right? You shouldn't always look for something that you think is a table pounder out when you, in my opinion. And so I'm going to say maintain those DEFCON shields. And that's it. Let's get into the charts because I know everybody wants to roll along. I'll stop the share briefly if it lets me. Wow, really fighting with me here. Stop that share. Get this stuff out of the way. We're not going to come back to it. I'm just going to do the best I can under the circumstances because it's just a little crazy in a lot of different ways right now. And let's bring up the right spot. Where is my screen three? There we go. So this is this, and this is what I'm going to talk about. Well, I'll come back to, actually, I'll come back to SLV. I mean, I hope I remember to come back to SLV. There was some really big paper in there. We've seen some earnings come out in different names. I don't even know, actually, I don't even know how they're doing. We had Newmont. Um, that's a disappointing earnings reaction. I think the paper was leaning bullish. CDE, HL. Let's see how some of these are doing. How some of these are doing now that I'm here. Yeah, so a lot of these individual names are enjoying a rally to go along with SLV, which really is having a standout day here. I think my son Pearson added this in the pit today, and I had some updates on it as well to hit later on in the day. We've had other. I've updated this for months and months after having a position in it in the service for a long time. But we'll see what happens here. If it starts behaving a little bit better and we see more paper, I'll probably assume it's going to try to at least make a run and maybe test the high. So probably try to put something else in there. But we've had other names, so I've let those other names sort of work for themselves because I didn't really see anything here other than retracement followed by consolidation. But let's get to where we really have to start, and that is SPY. And so this is the part of this is the part that frustrates, I think, a lot of newer people when you appear to be wishy-washy, and people want that sort of table pounding that I don't really deliver really at all. But very rarely do I even come close to doing that because I'm trying to be objective and kind of lean more, knowing I'm going to have to adjust probably because the market is not straightforward. The market's pretty tricky. Even if you've been doing it for a while, the market can still be tricky, which is why you have to. I just think trading is not an easy job. You always have to be on your toes. But you can make the argument right here that this is about to break out, and you could say that, right? You could put a line right there and say we're on the way to breaking in. All they really have to do is take out today's high, close above it, and you should be off to the races, challenging the next flat line up, which is going to be there. I'm not going to redraw it, but please, if you do, remember we've had a 689 and change, which could just as easily have been 690. We've had that for a very long time. There was a line there, and I took it away to minimize it so it didn't really affect us visually, right? Kind of get in our way, but it was really right near here. Let me see if I can highlight that one and just pull it over for us, and I'll try to make it nice and straight. And I believe it was right around 689.40, but I might be wrong. It really doesn't matter. The 690-ish is going to be good enough. I'm not going to get into the pennies on SPY. But you can see where you stopped, right? You stopped below there. That is a former resistance level that became a support level. Now we're below it. So this has been talked about even in this video, let alone weekly webinars that we do many times. And so right there is right there is where you are. So would you get excited about this right now if it had failed to break out above there in the 20? You could. Nothing wrong with that. You might say, well, I see, and you could even make this argument. You would just keeping everything simple with this simple techniques. You might say, well, I see positive divergence here on RSI, on rate of change, MACD, whatever you care to use, or all of them if you like them. And you could say, so I think this thing goes. Okay, that's fine. No matter what happens, you have to manage your risk, right? No matter what happens, you don't even know if it will be a false breakout, a real breakout. You just don't know. So you have to acknowledge that. You have to acknowledge the trend is still intact. You're still above the 100. This is not what we see intraday, what we've seen in terms of the volatility of the VIX itself. Just look how volatile the VIX has been, in terms of what it's been doing from day to day. It's not like this, it's not this boring kind of VIX stuff like back in here or back in here. There's been a lot of where people seem to think they really need to hedge or speculate a much more aggressive way time and time again since the middle of January. So a lot of people seem to be thinking that there's maybe something lurking out there or that something's going to break loose, and they seem to don't want to stay in this too long. So maybe what they do is they try to get in. If it doesn't break down and the news doesn't hit that they think maybe is going to take it down, they just get out by week's end or as the week wears on. But this remains elevated. It's you can see it's well off of that low, which I believe is a multi-year low. Usually, right, you're sitting somewhere these days, you're usually sitting somewhere between say 15 and 16, I think a lot of the time, when it's dormant. But this is kind of a wild thing that's happening here, and I think that's a little telling. But at the same time, you have to acknowledge that despite it all, they've been able to hold the SPY together, right? And as of right now, in as of right now in SPY, come on, right? There's a little bit of rockiness happening on my charts, but it's held together to this point. So, and here they are even kind of goosing right above 689, making sure that it's at least above 689. So I could be talked into being a bull very easily here, right? It just starts breaking out. I'm going to go with it. At the same time, right? You could say, well, this is the start of a little bit of a leg lower after this uprising ended. You drop off, you feign below the 100. They try to rally from there. It's a muted rally that doesn't accomplish much. It's options related, total BS, right in the face of news that really should have turned it back down to send it packing, but they're closing right near the highs of the day. But what happens if you don't get through and you roll over from here? Then you probably have another leg lower. You probably, if you take this out, you're probably on your way to the 150 down there in Rust, something like that. So you drop another, let's say, 3 to 4% from here, but probably another 1 to 2% from that low right there, right? So that's where how I would be ready as a short-term trader, just using the basic tools that everybody can use. I still would say that you have to give the benefit of the doubt to the trend, right? In the end, you want to give the benefit of the doubt to the trend. I think the news has me tilting bullishly. I do think a lot of this is options, potentially options expiration related, a bunch of complete shenanigans. But you've heard me say this before, they can extend shenanigans. It can start out as shenanigans. You might be lured into believing it's shenanigans. You might be right to think it's options related BS shenanigans. And yet by Monday, they'll just extend it. So what started out in a completely bogus fashion that you may be right in calling, that will become much more legitimate. And basically, if you're short, hurt you, right? So it's a very tough call. And so forcing trades on right now is not, to me, is just not a great idea in the short run because I don't know what news is lurking. And I feel like news could easily be made by Trump in the mode he's in right now. And he's really a newsmaker, as I said, even when he's not in this mode. So here you are, you close at 689.42. And I believe that was up where our line used to be. Here you are on the 11th of December. So there you go, 2+ months ago, roughly the same close. And this has been going on. So I've been saying that really, yeah, we've had some good scores here and there. For example, we saw Google paper very early this week that was bullish. It finally delivered some today. We had some Amazon paper that was bullish earlier this week. We had some other kind of mega cap names a few weeks back that some didn't trigger. Some that did ran nicely. Have there been a few nice trades here and there? Of course, there always are a few nice trades here or there in the service I spend most of my time in, but it has not been rip roaring. And when you look back on it, right? It's kind of been a subdued period, in terms of opportunities. It has not been a great trading period, which is not honestly not what I thought. I thought this was going to be a really good trading period to end the year and start the year, and that's why I keep an open mind. All these things develop, and news can take over. It can keep things tamped down, and the market has a way of consolidating after big runs, and it's been doing that. I mean, if you want to go back even further, here you are on October, what is this, October 30th? You closed at 687.39, right? So this is where you've been now for what? That would be 3.5 months. So yeah, I mean, it just kind of shows you, yeah, there's been a couple of dips, there's been a couple of rips, but it just hasn't been easy trading, right? If you look at this more as a weekly chart, which I think is maybe helpful here, I think you're going to see on a weekly chart that, this is what we've been dealing with. This is just not a great, right? This is not a uh, great market for runaway momentum. And a lot of people are going to say when you've been going sideways for this long, right? Everyone sort of that's been around has heard that saying or axiom that uh, bottoms are an event. It's something like this. Bottoms are an event, but topping is a process. Bottoming it tends to be an event, and topping tends to be a process. And I think that there's some truth to that for sure. And so you could make the argument that yeah, you are topping, right? You're seeing distribution. They're selling here at probably historically high valuations with various problems that are out there and a lot of eggs in one basket. A lot of people are long things like these SMH. There's a high concentration, like everyone owning these things, but at the same time, there's a lot of shorts and stuff like that too right now. So that's why this is just not an easy juncture, right? It is not an easy juncture. It is not where you could just say there's trending action. You're getting your pullbacks. If you haven't gotten in, you want to start to see trend resumption. You're going to get in then. You're going to ride it again, right? This is sort of sidewaysing at the moment right now and you have to wait for a breakout to keep doing this. It could be that we get one. I mean, as I say, it wouldn't surprise me. I think I'm more bearish in terms of my psychology of what I would do if I were trading on not on the charts. If I were to had like a lean, I'd be like, well, I'm more of a bear right now. But I know better than to do that. I'm just going to keep going with the action. And here's Nvidia, right? So this thing could really start to power with the earnings looming. We know what they do. This has been dormant for a very long time. This could start to put together a strong move. If it does to the upside, you know what that'll do to SMH. You know what that'll do to the tech area and just the whole market. It'll probably start pulling it. So remember, people complain about what's very narrow. This is BS. There's a lot of those people that complain that make those arguments that I think those arguments can be well founded at times, but it just really doesn't matter in the short term trading. That's more for taking longer term positions. And even then, I wouldn't do that unless I had the trend in my favor or I was trading on a very short leash against the trend, thinking that a reversal could set up. So but which an example of that would be XLP for me right now. I took a very small position against XLP. I had some options I sold at the 84 level expire. So now I'm naked long, if you will, some puts that are in the money, slightly in the money. And I'm waiting to see if they rotate out of this and start going back into other more aggressive areas. And if they do, that'll start bringing this down, and it'll retrace some of this massive defensive positioning. That's essentially it right there. But, it's a small position. If it starts looking like it's going to, if the market does rally and it starts participating and they don't let it go, I'm going to be out. I'm not going to stick around if these guys are going to start making new highs versus that. And I'm done, right? I'm just going to just say, okay, well, gave it a shot. I'm keeping it on a short leash because clearly I'm against this consolidated for so long, broke out strongly. I don't want to play something right that's against us, what could be a strong trend and just after the sort of first leg of a potential breakout move. So I'm going to just trade it in the short term, short leash, and then I won't stick around and overstay my welcome. And I will be rolling this if it does plunge, if I get a good plunge out of it, let's say down to these former highs area, something like that. At that point, I'll definitely roll down because I wouldn't, again, I'm still going against the trend and you're going to be finding yourself on support. So if I want to stay in the trade, I'm going to I'm going to roll down because I know I'm fighting trend and I know I'm right on support. Right. And then if that roll down, that aggressive roll down doesn't work and they start taking it back up, I won't give as much back, but I won't even overstay my welcome on that because you can only expect so much typically, right, when you're fighting against the trend, just to kind of illustrate that point. But if we bring this over, which I will right now, and we'll get back to other things. If I bring the sectors over, this was probably not a bad week overall sector wise because XLE hung in there. XLK hung in there. They used, I think, Meta and Google to an extent, maybe a few other names in XLC to put together a nice week there where that was looking sketchy last week. The two defensive sectors hung in there. XLF, they have a short-term bottom in there. We had a bear idea that probably maxed out earlier in the week. And you could see that there's sort of this hesitation in staples and then the discretionary, they're coming back a little bit in here late. And transports got their act together late. Two strong sectors, XLI, XLB, remain strong, and XLU hung in there. So to me, right, the sectors look a little bit better ending this week as a package. I'm not going to really belabor that, but that's really what I see on that. Now, what's hidden behind here should be, I wanted to show this. So there's the indicator from Mike Zaccardi. He puts out a lot of good stuff. He's got access to stuff. So I like to follow him and other stuff, other guys that are similar. But yeah, he's got that in and you're extremely bullish, right? So you're in extremely bullish territory right now. So that's, I think, more long-term oriented, the way that that measures things. So let's go back to our other views, if I can. Let's see. I don't want that anymore. Let me just minimize that. Where are we on this? Oh, okay, yeah. So we did have some SLV hit, but yeah, I mean, I've been just trying to essentially stock pick and prep for possible breakouts and breakdowns with good setups. It's just not strong across the board with what we've been seeing. I can't say, well, yeah, this has been just tremendous time. It's probably been just a frustrating time from a UOA perspective in the sense that there's as I say, there's this happening here and there, but nothing's really spectacular about it. You're just not getting the big names to really deliver in a really big way. There were a few, I forget which ones. I want to say it was, I don't remember. It was sort of like a was it what? No, it was more something around something. Maybe was it? I don't think it was TS. It could have been TSM. I don't remember, but it was something had a really nice move. But I mean, it's just not like we usually, when the market's really going, we get really consistently get at least a couple that are just like spectacular movers. And you're like, okay, that really tilts things in your favor in terms of trading this style, right? Where you get these ones that just are super strong performers in a short period of time. But that hasn't really been the case with too many lately. I'm trying to get my. Is this going? Did it move to here? Yeah, I think it did move to here. So I'm just going to try to get us a quick look at market breadth here. Let me just try to not have this so crunched. And so you can see market breadth really continues to be good. And this is just a basic view of various different measures that you can check out. We just kind of keep it as our basic go-to just to get a real a simple look at it. But you can see the new highs versus new lows. You can see the McClellan summation powering the new all-time highs, right? All these things. Now, I don't want to go into all of them. We don't really talk about the fine points of this very often, but you really can't argue with market breadth. I think overall, at the worst case you could make for the sector views is that you are neutral. That's probably your worst case after this week. So when I see that, right, you have to sort of say, well, there's something to this. And I feel like in the short run, they did sort of bomb out certain things. The market's really been restricted. They could use that kind of news that could develop from Nvidia to really create that squeeze, just like they did today. No matter, I don't really care who's talking. I'm not really a table pounder for I've got this right. You've got it wrong. If you disagree with me, I'm really not like that. But in this case, I'm pretty staunch about calling today BS because you can't, you can't tell me that if the tariff news comes out and that's the tariffs being wiped out by the court, you can't tell me that that's bullish and then have Trump, and then they do this on that, and then you have Trump come out later in the day and say he's going about it a different way, reimposes tariffs and drops another 10% apparently on top from what I saw. I think that's what I saw anyway. That's the report. I saw a couple reports like that. So that's the best, recent proof is in the pudding of this is, this is bull. This is, you can tell me the market went up today. You can tell me it went up because too many people were thinking it was going to go down. You can tell me that options positioning helped it. I'd probably agree with you on all that. You can't tell me it's because in the end nothing changed. And it was potentially surprising for, I think, most people that Trump just literally within hours, Trump's doing the same thing all over again and then some. So it is what it is, but just shows you they build things up. They use it as a big energy sort of psychological focal point and then play games with it. And then unfortunately, we have the so-called media that rarely calls out the kind of commentary they get from their guests. They just kind of let it slide, and that's that. So backing up though to the charts, you could say, well, I just added a line, as you can see, like you're one day from there, one decent day from there. That's the all-time high in SPY. And you could just say, after all this, well, what's the problem, right? What is the problem where a market that had such a great performance consolidated, didn't give very much back, and then ran? There's nothing, and there's absolutely nothing wrong with viewing it that way, right? There really isn't. I do think that a lot of these stories that were sold to people that position themselves super aggressively, these stories I do think are getting sort of some of the knees or the legs of the so-called stool knocked out from under them. That might not matter though right away, as I said. So that's why I would not rule out that even if sort of the story is falling apart, it doesn't really matter until the psychology falls apart. And on whose timing exactly this happens, I don't know. But what I've noticed is that it becomes obvious to people that are paying attention, trying to be objective, and then there still is more to come. And if you start fighting against something too soon, they could clobber you, right? So that's why I'm not saying like from yesterday to today, I switched to become a permable because yesterday I didn't like the feel of things and I still don't. But I don't know what news is lurking out there, what's going to happen next. And might not all be Trump. It could be other things happen that are not directly related to Trump and his administration. So I don't know. But I do think, right, I'm willing to go either way because of all the things we've discussed. You can talk me into this has been this distribution pattern because of the way it's been trading. And you can talk to me about how the story's getting the legs knocked out from under it and how some of these capex expectations are overly optimistic. And you can talk to me about there's problems with all of them because they won't be able to do what they think. And you could tell me that that's going to hurt buybacks, which have largely driven a lot of these stocks higher. And so with all that gone, what's going to happen, right? Especially with the economy doing this, that, and the other thing, and people like Bostic today talking about how with due to tariffs, and what inflation that could produce, we might need to keep rates, push rates up again. And I know he's leaving, but these are comments that are being made. So things are really in flux, and I think I think when it's very simple to me. I'm not a card player, but even I know, right, that you don't bet, at least I think the smart players do not bet their full bank on every hand, right? Because they really want to wait until they really feel like there's a great chance for a big bet when they really think that they're going to have a positive, very high positive expectancy. In other words, the odds are really in their favor to do that. They don't do that on every hand, knowing that not every hand is like that. So that's what I would say. I don't think it's an easy thing right now. I do think the way that they close this out could turn it into a squeeze. And I would say you're literally in even in Qs, you're probably 1 to 2 days away from legitimately trying to break out above the 50. So everything could change very quickly. It could all, that's where we're still at all this time later. And I know that a lot of people don't like that, but if you go and, as I say, you go and think about it, we have not really overextended ourselves other than when I really thought that we were going to squeeze and we didn't. And I mentioned that when you don't get what you think, you got to be really, then you really have to say, okay, something's out there, something's wrong. So it's not behaving the way it should. Same thing here. I feel like that's the same thing. You really should be heading higher after this, assuming we news neutrality into Monday's opening. They should be able to start taking this back up. They weathered the storm for now, and if they don't, it's probably would be due to news, or if they're still selling, that should be concerning still. Because why does someone keep laying on the market? Why does someone keep laying supply all over the market? Why do they keep distributing or shorting up here? Is there something looming that's really not fixed in stone, but is out there that's apparently likely to happen? So IWM to me, I mean, this looks good. I don't see why it too. It's so close to breaking out, so close to easily within a few sessions being back at the all-time high, weathering this. Right, but even all these candles just show you the indecisiveness here and maybe the lack of commitment. So maybe they're waiting for an all, people are waiting for an all clear. I think in UOA they've been waiting for an all clear one way or the other to either aggressively hedge or play the downside or just get back into doing what they do most of the time, which is buy calls in stocks that are uptrending or have news looming or so on and so forth. But we just haven't seen it. So all I'm really telling you is the market acting the way it is consistently, which has just been frustrating. It just maybe there's a good reason for it right now, and we just have to wait it out to get more information and see what it does. But you could very easily be right down at pressuring the 50-day, which would be another big deal, right? You just don't know. I would lean, I think you have to lean slightly bullish, as I say, coming out of all this with the way things are setting up to finish the week. You have to lean slightly bullish on balance when you read these technicals. But at the same time, um, right, you know that you're at the higher end of the valuation spectrum, and in terms of long term, and so you might have limited upside. You do get the back half of Feb can be rough. We're still in that. March isn't typically a bad month, but it does have a few that are notoriously bad. A few times when there's been some real rough stuff that developed during March, which I don't know is related to the old Shakespeare line that everyone cites, but could be. I don't know. It might be something about March, but here you are, the latest test of the 50 in the diamonds. You would have to say a relatively mild pullback for, right, a $500 ETF. You only pull back 2% and you hold and you hold. Then you turn around here. And you have volume kicking in. So, people that want to look at this negatively are probably going to say that was a lot of OpEx BS. Might be right. People that want to look at it positively are going to say, well, I don't think it was, right? I think people just said there was enough selling. They came in, the market didn't break. They came in, they covered, shorts covered, and other players jumped on seeing that we're about to start lifting into the end of the month and maybe beyond. So you can spin it how you want. I just feel like why not just wait until, as I've said, why not just wait until you really start to see the attempt of a breakout or breakdown, get in and then manage it. Because right now, right, you're in a lot of noise, and so you have to do the stock picking. I think that's it's a lot easier. Sometimes it's great to be just trading these indices. IWM was moving around very nicely. Volatility was very subdued. You could really get in, get some really nice movement out of it. But this week's that's rough for people that want to do more of a swing trade where they're holding for days or maybe the week. You could say, well, what's the problem, right? We traded from as low as say 259, and we traded all the way up to 267. If you bought on Monday and held for the week, you could have really uncorked it nicely. You could. I mean, it would have been some pretty deft trading, depending on what intradays you're working with, but it could. But you can really see sort of, I think you see sort of like different types of triangles setting up here right now between IWM, which we just saw, SPY. You can expand this and sort of feel like you're getting into a little bit of a triangle here. And so that's just indicative of uh, the indecision and that you're working your way probably towards the apex of the triangles. Probably. Now, could it morph into another more, let's say, complicated pattern? Yeah, it could. But I mean, this definitely has the triangle look to it with this low along those lows and then these highs along those highs, and you're working your way out through a triangle. And the presumption is that you break with the trend. The incoming trend was up, and so you would continue, expect it to continue, would be your default position unless you've got some really good reasons. Now, if I'm a bear, right, I would probably prefer to see sectors looking concerning, and they don't look as concerning at the end of this week as they did last week in my view. And I would want to see the breadth starting to really tail off and tell me that there's problems developing. We haven't had that either. We've had the opposite. So the only problem is the you could just go with the well, the glass is way too full. They've overdone it. And that's why it's going to be rough when it does turn because everyone's too bulled up and they position themselves that way. And it's a very crowded trade. And that's all true too. But if they're right, we have another leg, we start going higher. We all want to trade that and make money from it. So I would just say, look, in closing here, I would just say don't get locked in. I think this snapshot in time, we're still in a bull market that's held trend. This is like the where we are. And you just have to be, I think you have to be on guard because of the news that could impact this market and have your shields ready that way for sure. And the fact that the VIX just is trading in this wild manner and we're getting a lot of wild intraday action. And under this market, there's a lot of serious damage. The story is kind of getting knocked out a little bit. The economic data is looking rough and all that. And you've got this sort of fight between the White House and the Fed for now. You've got the fight between the White House and apparently the Supreme Court, the fight between the White House and Congress, right? And we all know that can all end up mattering in some degree to some degree, but we also know that the wall of worry thing has its moments too, where everything looks pretty bad. So what does the market do? It confounds people. It just keeps going higher in the face of it all. So I'm sticking with that. I've made more definitive, I think this happens, that happens calls, but we're in such a crazy, as I say, intergalactic drama. We're in such crazy times here that to me, right, forcing an opinion makes even less sense when you're confronted with what we're confronted with. If you had to lean, I'm leaning again. If I had to lean at this moment, I would be probably more bullish, assuming news neutrality. But yesterday I was more bearish, right? Because the week hadn't closed. I thought this could be a rough day, depending on how things played out. And it wasn't. It turned out to be by the spiders and Qs, right? It turned out to be a good finish to the week where they were in jeopardy for much of the week of playing around with sort of fire, right? So that's how you could say fickle I am, or you could say that's how flexible I am, depending on how you want to describe it. I consider it being flexible because uh, I learned the hard way, as I say, many decades ago, that you're better off embracing what's next rather than fighting against it for too long. And then that sets you back not only in where your current positioning was, where you lose money, but you also lose more money and you end up uh, curtailing or truncating your opportunity to make money on that next shift in the momentum dynamics. When that shifts, right, the sooner you recognize that and react to it, the sooner you're going to close the wrong side out at the moment, get into the right side at the moment. So that's just the way it is. So I think that's what happens when you have to trade every day. You're expected to try to grind out money every day. You really can't overstay your welcome with most firms for too long. They're not going to put up with somebody who wants to just take on water, take on water, take on water. You really have to just be reactive and go with it. Embrace the fact that it's changed and just it can really be frustrating at times. But that's what serves you well in a tricky market, and I definitely think we are in a tricky market. So I'm going to end on that note. And I'm sorry, I did my best to cobble everything together. Had a lot of thoughts. I had a lot of notes, but just time is a major factor for me right now for various reasons. So just wanted to at least get something out to everybody. I would, in closing, I would just stay mentally prepared for having to hedge or to play the downside, but news neutral. I think that once again, bulls are in a position to start lifting this market again. If they don't, that is another potentially telling sign. So just keep your wits about you, keep your discipline, keep your risk under control, and we'll get onto a better phase where we get stronger trending action that we can probably do far better in than what we've seen here in the first month and a half plus here. So everyone, on that note, everyone have a great, safe weekend. Thanks for tuning in. I hope you got something out of this, and I wish everyone a great week. Be in touch throughout the week. Thank you.